One of the first questions I ever asked when I was getting a little bit more into the stock market was, what is a dividend? So I figured there's probably other people out there that are wondering the same thing. Let's break it down. Before I get into this, I do have some other videos though in terms of what is the stock market, how does it work. So if you're not even familiar with how that stuff all unfolds, then definitely watch those videos first. And also I use a whole pizza analogy in those videos. So for those of you that have been going through the videos, I want to kind of carry that analogy through. So we're going to talk about pizza here again and help use that to help explain how a dividend works, what a dividend actually is. So again, as we've been discussing, the market is just a big pizza market. There's slices of pizza, and that's what allows you to get ownership into a pizza. But a dividend is essentially just thank you. It's a company's way of telling you, hey, thank you. But instead of just having it be empty words, companies will actually kind of quote unquote put their money where their mouth is. So it's basically a thank you card that comes with some cash in it. And that is what a dividend is. Now, what are they saying thank you for? Well, if you are buying, and if you have bought, I should say, a slice of their pizza, and then you hold on to it. Or in other words, you put it into your portfolio and you are an investor. So you buy a slice of pizza. So we'll say you got some pepperoni pizza and now you are just holding it. Or in kind of investment terms, you are an investor. You are an investor in, the pepperoni pizza. You are investing. This would be an investment. All those different words would fit together. Now the company, and we'll just say, we'll call it, PEP, which is a ticker symbol, meaning just the name of the company for short. PEP is, as I noticed, they're saying, hey, this person is holding. They're holding. They're an investor in our company. We want to show them thank you. So what a lot of established companies do, now not all companies, so this is something that you'd always want to make and check for first to make sure that they do offer it, but is they're going to offer a dividend. And again, a dividend, just think about that as, a thank you card that shows up with money into it. But before you ever buy a slice of a company, they're going to tell you up front what they pay, what their thank you rate is. And for this, let's just say that their thank you rate is, for every slice of pizza that you have, we're going to pay you $1.25 per year. Now that doesn't sound like a lot if it's just one slice of pizza, but remember, with shares, you can get a lot and a lot of shares, so that can start to add back up. But that is what the dividend would be called. This is what the dividend would be. Just $1.25 they're going to pay you per year to just hold on, to hang on to that share, be an investor in it, have it as a long-term investment. So this is, like I said, that's called the dividend. And then this is paid usually quarterly, meaning 4 times a year they're going to pay that. Now this is broken down, so that's the yearly amount, but 4 times a year usually is when they're going to divide that up and send that to you as a dividend payment. And now most I say quarterly, but in other instances, I know there's one out there that will pay it every month. So the assumption is, I should say the safe assumption, 4 times a year quarterly, but every company may be a little different. But the point here being, that's what they're paying you to hold on to, their slice of pizza. They're saying, hey, thank you very much for being an investor. We want to pay you that. So maybe you've heard of this too. People are talking about a dividend yield. What is a dividend yield? Well, that's just a way to, assign a percentage to what the investment's actually paying you in regards to the dividend. And that's just a very basic equation. And the equation is, let's change up the colors here. So, or what did I want to call it? That's the second. I sit here and say that the equation's simple and I can't even remember it, but it's going to be the thank you amount. So in this case, we'll use $1.25, but it's that thank you amount, otherwise known as the dividend. And then it's just going to be divided by the price per share. Or in other words, price per slice. So with our analogy, price per slice, but actually it's going to be the price per share if you want to use, stock market lingo. So for our example, let's just say that $35. So right now, a piece of pepperoni pizza is trading for $35. Well, we already know that what the dividend is $1.25. So $1.25 divided by 35 is, I don't know what that is. You can just keep it running, that's fine. So 125 divided by 35 is 0.0357. You want to multiply that by 100 just so you can convert it into a percentage. And that would be a 3.57% yield. So if you want to sound super smart, do it without a calculator if you want to look really smart, but I'm not that smart. So if you want to sound smart with your friends though, just say, yeah, you know, I bought some pepperoni pizza and the dividend yield is 3.57%. They're probably like, they're gonna, if you want to get some girls, that's what you talk to them about. Girls, they're all about, you know, if you can talk like smart with them, and that, to me, that's pretty smart. Is, yeah, I bought some pepperoni pizza, it's giving me a 3.57% dividend yield. They're gonna just be like, marry me right now. It's gonna be, just try it. But point here being, that's what a dividend is. It's simply a company saying, hey, thank you for being an investor. And then if you want to calculate the actual percentage, the yield that you're getting for making an investment, you know, just that basic equation, don't forget to multiply it by 100 so you can convert it into the percentage. And then you can go talk to girls and tell them about that stuff. And it's going to be a great way to just have them fighting over you. So any questions? I think I've explained it pretty good. But if there are any other questions, leave the comments down below. I do read the comments. I will reply to them, and I'll get anything cleared up. But again, just one final thing. Remember, I just went through this to keep the math easy, but most times you're going to have many pieces of pizza. You're going to have many shares that you have. So the $1.25 will add up over time. And that's the whole thing here. A dividend strategy is not a get rich quick thing by any means. It is something meant for investing over the long haul. And then you have the power of compounding and all those different attributes that maybe you've learned about in math that really go into play. And then this is going to build wealth slowly over time. So I don't want to come across like, hey, dividends are a great way to get rich next week. And you can go buy it. Nothing like that. This is a long-term strategy, but it's a strategy that's worked. It's proven to work. I mean, there's plenty of data. There's plenty of studies out there that show dividend stocks, while boring over the long haul, they are going to build wealth because of, you know, just the company saying, hey, thank you. We want to give you some money for hanging onto our stock. So hopefully you found this helpful. As always, if you have any suggestions for other kind of very basic videos for the market, I'm always looking for suggestions. So you can also leave those in the comment section below. But again, let me know if you do have any questions for this, and hopefully it can help you out.